More Idaho Matters now from the studios of Boise State Public Radio News. I'm Gemma Caudette. If you watched the news or the stock market last week, you may have noticed some wide swings in the financial market. Now, a lot of the ups and downs had to do with the Trump administration's new tariffs against other countries, which made the market nervous and quite uncertain. So what should the average investor or someone with a stock-based retirement account do in these situations? Here to help us is Jason Norris, Director of Equity Research and Portfolio Management with Ferguson Wellman Capital Management Group. Jason, it's always good to have you on the show.
Great to be here, Gemma.
Okay, so Jason, let's just get right to the basics for a minute. Can you tell us what a tariff is?
So a tariff is a tax, and the tax is paid by the company or individual that's importing the good. So if you're a business and you import $1,000 worth of material from China and there's a 10% tariff, you have to pay $100 of tax when the item comes in. The nuance is, does the business pay all of it? Do they raise their prices? Do they try to push back on their supplier to lower their prices? And that's also what creates a lot of uncertainty. But it is a tax paid to the U.S. government by the importer inside the United States.
All right. And as you said, with those three options you laid out, a lot of the time that cost is rolled over to the consumer when we're talking tariffs. Is that a correct assessment?
It usually is, at least a portion of it. If you're, let's say, Walmart, you may be able to push back on your suppliers to lower their prices. But if you're just a small business and don't have leverage on a supplier, then you either have to raise your price or lower your profit margin or a combination of both. But it really hits small business owners more because they don't have the leverage that large companies do to push back on their suppliers.
Okay, so for folks who may not have been paying a lot of attention, Jason, what happened with tariffs last week? What did the Trump administration do?
So initially, the Trump administration had put reciprocal tariffs on every country in the world. This was a week and a half ago. So it put a tax on all countries that we import from. On Wednesday of last week, the Trump administration put a 90-day pause on those tariffs, except for China, but kept a flat 10% tariff on every country. So that was a relief to investors because it showed maybe the tariffs aren't going to be as bad as they initially are viewed to be. But uncertainty still reigns because it seems like things change almost on a daily basis.
And Jason, how did the stock market react to all of this volatility from April 2nd, when Trump put these tariffs in place, to, last week when he put the 90-day pause on it, to another situation over the weekend where he said, all right, we won't put tariffs on certain electronics like iPhones?
So initially, after the April 2nd announcement, markets sold off meaningfully, talking several percentage points a day. Stocks were down from their highs about 18% in a very quick period. Last Wednesday was a sigh of relief with the market being up almost 10%. But still, if you're a 100% stock investor, you're still down about 8 to 10% for the year. So investors are going to trying to handicap exactly what's going to happen. But what investors don't like is uncertainty, and the constant changing of policy has led to this volatility just because you just don't know what you don't know.
Well, and Jason, let me just anecdotally talk about something that my husband and I talked about this last weekend. Our son has a birthday coming up in a couple of weeks. He wants this PlayStation controller thing for his PlayStation. And, I looked at my husband and I said, should we go buy that? Because it's made in China and it's all, and it's an expensive controller. Could it, it could go up again. And my husband was like, well, he paused those tariffs, and we're both like, yeah, but they could come back. So do we buy it now? Do we wait another week? What do we do? And it's this idea, but I also feel like that's exactly what people are thinking about with their investments in the stock market, right? It's nobody likes that uncertainty. So I don't think I am, out of the norm by having those thoughts. So what should the average investor be doing right now?
So the average investor really has to assess their time horizon, because most people, are saving, investing for retirement, and so maybe their time horizon is longer term, and just be patient to ride it out. The one thing they shouldn't do is panic or make any major investment decisions in an environment like this, because
Mhm.
usually it just you end up losing more if you're trying to time the market or you sell at the wrong time. So understanding your risk tolerance, but also understanding your time horizon, because if your investments are going to be used in 10 to 15 years from now, you can the volatility will end and markets will
Mhm.
continue to trend higher, but during these periods it's not necessarily fun.
Right, you can ride that wave, right? If you don't need that money, let's say in the next decade. With that said though, Jason,
Exactly.
there are a lot of folks who have stock-based retirement plans. If you have a 401k, you have a stock-based retirement plan. So, and now let's say you are getting ready to retire, or maybe you have just retired. How concerned should you be about what's happening in the market? And again, what should you be doing, especially if you're right where you thought maybe you were going to retire in the next year?
Yeah, unfortunately, if you had a large exposure to just stocks and you are looking to retire in the next couple of years, it will add a little bit of angst. The key is when you're getting close to retirement is to make sure your investments are diversified across
Mm-hmm.
US stocks, international, and bonds as well, because it smooths out that volatility that we're seeing now. And so as people get closer to retirement, we get closer to when they're looking to start spending their investment account, they have to make sure it's really diversified to reduce this volatility. So you're not in a panic and not selling stocks now just to pay the monthly rent when markets are down 10 to 15%.
So, advice for folks then who are staying invested for the long term, Jason, is it really just to kind of take a deep breath and ride this, wave right now?
It the short answer is yes. But in these periods, it's always good to take a look at yourself and how, if there was a lot of angst, and maybe you reevaluate your risk tolerance. But
Mm-hmm.
and during these periods, it's never a bad time to call, if you're working with a financial advisor, to give them a call and just kind of discuss. And in our business, a lot of it is, we call it hand holding. And it's in time like these that we do a lot of hand holding, and it's good just to talk with someone if you're working with right now.
So I want to switch gears for a minute and talk about the fact that April is National Financial Literacy Month. And I know you have a new program to help folks with financial literacy, which is called Dollar Sense. First off, can you tell us a little bit about the program?
So Dollar Sense is a series of 12 videos, and they're each about 5 minutes long, that we put together over the last year and a half. And they cover not just the basics of investing, but also of financial planning, budgeting, and they're geared to all audiences. But we initially started was geared to more, let's say, high school or college kids,
Hmm.
but we found that clients and friends of our firm from all ages find them very interesting. So they've been very well received.
Well, why is financial literacy so important, Jason? Because it's really something that we're not taught, right? And I think it can impact a lot of people very negatively when you don't have that knowledge.
You're exactly right, and a lot of it starts when you go to college. I remember when I dropped my daughter off at college several years ago, and all of a sudden she's getting credit card offers. And if you don't have the
Mm,
financial literacy on how to budget and how to spend, you can get in trouble at a very young age. And just as we work through our lives and you start making more money, understanding how to save for retirement, and just not, because you can get in a lot of trouble if you take in a lot of debt. So we think it's really important to focus on financial literacy. There's a lot of great nonprofits who do a lot of good work that we're partnering with as well. So it's just a good time to highlight the necessity for it. Fortunately, in the state of Oregon, they are passing a law to require it taught in high school, and they're doing the same in Washington. So maybe over time it'll catch its way to Idaho.
Hmm. So I want to go back to these videos you mentioned. These are kind of micro videos, right? And as you said, they're about 5 minutes long. And because they break down some really complex ideas. But here's the cool part, I think, Jason, they include worksheets so that folks can actually do the math if they want to learn more. I am assuming videos like this can help anyone, regardless of your income, regardless if you invest in the stock market or not.
You are exactly correct, because a lot of times in our industry we take it for granted to how much people who don't work in the industry know, and so they're good for students, they're good for their parents, and maybe all of them aren't relevant, but a lot of them are a good insight on what is a stock and what is the stock market, to how to create a budget. There's a lot of good material, and to be honest with you, they're actually somewhat entertaining, at least for financial material.
So, Jason, before I let you go, what's your final bit of advice for anyone who's watching the wide swings in the financial market right now, and frankly, just every day seems to bring a new hurdle with it?
It's take a deep breath and understand the situation you're in and what your time horizon is. And if you are years out or even decades out before you're looking to spend down your 401k, then you have the time to write it out. If though during these periods of high volatility, it's you can't sleep at night, then maybe
Hmm.
you evaluate what's invested in your portfolio. But making major changes now is usually not the right answer.
Well, appreciate all of your good advice. We've been speaking with Jason Norris. He's Director of Equity Research and Portfolio Management with Ferguson Wellman Capital Management. We will, of course, put links on our website to Ferguson Wellman's free financial literacy videos. Just make sure you go to our website, boisestatepublicradio.org. And that'll do it for this episode of Idaho Matters. Thanks so much for listening. And just a reminder, you can find all of our episodes wherever you get your podcasts.